Here's how we can prepare for the Bitcoin pre-halving retrace. These current price levels resemble very much the levels that we saw in 2019, but pre-halving, which is this vertical blue line over here, pre-halving, we have more scope for downside rather than upside, and the fact is that just after the halving, we have more scope for upside going forward. It looks like we're mirroring the same situation as in 2019. So let's talk about this in a bit more detail in today's video. Subscribe to the channel for more videos like this in the future. Like this content if you enjoy it, and let's dive right in. So 2019 shows us that before the halving, there's a bit more scope for downside inside this black triangular market structure. But after the halving, we see the same exact prices, but with more scope for upside going into a parabolic uptrend. So it does look like we're mirroring 2019 in that respect, but we really need to understand this pre-halving retrace that might lie ahead. So let's break it down into distinct phases. And here's that chart. The next 140 days are going to represent a potential outsized opportunity in the form of a retrace to as low as the macro higher low right over here. But we have to maintain that we're not going to revisit the bear market lows as 2019 is suggesting. So this 15,500 level is going to be most likely untapped. However, if we focus on this macro higher low, perhaps we have a chance at this macro higher low being touched, and that is around the 20k region, especially if we reject from the lower high resistance. And of course, at this same point in the cycle right over here, we did get a rejection and then a stronger rejection later in the pre-halving period. So this pre-halving period is 100 days, 140 days in fact, long. And so the next 140 days could be really important in securing a fantastic buy side opportunity, because just before the halving, around 63 days, so that's 2 months, we have a rebound, we have a trend reversal into a pre-halving rally. And you can see that here, the pre-halving rally is this light blue area. So once we have that orange pre-halving retrace and correction during the pre-halving period, we could see a trend reversal into a pre-halving rally going into the halving. But we have to understand that there will be a pre-halving retrace around the halving event, and that's this blue circle. So the blue circle could represent a pre-halving retrace. So just to break this down in order, we're going to see a pre-halving period of 140 days, some retracement take place, and then around 2 months before the halving, we'll see a trend reversal after that crash, pre-halving rally into another pre-halving retrace, which is going to be a bit shallower. And then that's going to transition us into a post-halving resistance area where we will finally break beyond the highs into parabolic post-halving continuation. So the way that this could translate into this cycle, in this 140-day period, we could see 20k. We could see a crash into 20k. That's around a 25%, 30% retrace from current price levels. We could see some retracement in this black triangular market structure into the macro higher low. That would be the best buy side opportunity for us. But then once we've secured a retrace that's a bit deeper, we'll see a transitionary period from the macro higher low into a pre-halving rally, where we'd probably see a breakout beyond this black triangular market structure. And then once we break out, still we might not break beyond 30 to 31k. We might just break into current price levels, which is quite interesting, right? Because these current price levels could be predisposed to a bit more downside in the coming months. But around the halving event, we're going to be breaking out towards these same current prices, but this time the pre-halving rally will probably end and see a pre-halving retrace, 20, 30, 40% retracement. Difficult to say, but somewhere around those regions, 20 to 38%, roughly speaking, because here we saw around 20%, but historically we've seen 38% retracements around the pre-halving period. So a pre-halving retrace right over here And once we've seen that pre-halving retrace conclude, we'll enjoy this post-halving resistance area. We'll have a recovery into 31k, but potentially some rejection still at 31k, but limited downside beyond that point. And in fact, it will be only a matter of time before 31k is breached, before Bitcoin enjoys post-halving parabolic continuation to new all-time highs in as early as late 2024 and as late as 2025. So that's the checkpoints that we need to be really focusing on. The pre-halving period and a potential retracement, that's quite deep in fact, but then a trend reversal 2 months before the halving, before we see a pre-halving rally, pre-halving retrace, before we see some reaccumulation in this post-halving resistance area. Because during this pre-halving rally right over here, like we saw in 2019, for instance, we're going to see a lot of people buy in anticipation of hype going into the halving. And then they're going to be really disappointed when we see the pre-halving retrace and multiple weeks of consolidation with no real price appreciation during this period. And the people who bought in anticipation of the hype to sell the news and make a quick profit, these buyers are going to be very frustrated, and they're going to be capitulating and impatient and bored during this period in this pre-halving retrace, and they're going to be shaken out because of that sort of mindset. But the key thing here is that don't get shaken out at that point in time, because that pre-halving retrace is going to be one of the last shakeouts before we transition into the post-halving resistance era, which is going to be reaccumulation before new all-time highs. So really important not to get shaken out, because this crash is designed to shake you out. This rally is designed to make you FOMO in a little bit too late, just before we see a pre-halving retrace, and people are going to be capitulating after that FOMO reaction and capitulating and panic selling, really regretting buying into that strong uptrend. But even if you buy into this strong uptrend, that's still going to be fantastic ROI over the long run. But the knee-jerk reaction is going to be to panic sell that once we see that pre-halving retrace. But the key thing is to not get shaken out at this reaccumulation era, not get shaken out at the pre-halving retrace, not get shaken out at this pre-halving period of 140 days where we could still see a crash into 20k. Don't get shaken out in any of these phases. Make the most of them. Accumulate around the 20k area once we get a pre-halving period crash to 20k. Accumulate once we've seen the end of that pre-halving rally. Accumulate on the pre-halving retrace and accumulate in the reaccumulation period that will proceed further upside. And what's funny about this reaccumulation area right over here is that it's at the same price points that we're seeing right now. But the thing about these price points right now, as you'll see in this first chart, is that these price points right now, prior to the halving, could be a little bit predisposed to downside opportunities rather than upside opportunities, which will be more likely post-halving rather than pre-halving. So the same price points, but more scope for downside prior to the halving and more scope for upside after the halving. That's something that you really need to take into account. So buying right now might not be the best opportunity, because that's going to be jumping the gun before we see a confirmed uptrend. Of course, price could break out beyond this lower high and could break out beyond 30 to 31k. But you don't want to be buying before we get that decision. We want to be buying once we've retested and reclaimed 31k as a support. Should we even break out from here? But history is suggesting that we have more scope for downside than upside from this point in time. So really important to wait for that confirmed downtrend or even uptrend. If we reject from this lower high, we'll probably go to 26k once again and lose 26 to 25k as a support, and we're going to see further downside into the low 20k region. And that downside is going to be the last ever opportunity. Can you believe it? Let that sink in for a moment. That's going to be the last ever opportunity that we get into low 20k regions, because afterwards, once we breach this 65, 69k old all-time high region, the most downside we could see in the next bear market would be to these same levels of around 60k, maybe a bit lower if we're lucky, to 50k, 48k for instance, but we're not going to get into 20k. So this is the last opportunity to dollar cost average into the low 20k region, and that's going to be within the next 5 to 6 months. Only 5 to 6 months left of outsized potential bargain buying opportunity in the low 20k, maybe even sub 20k if we're lucky. But these are the next crucial upcoming months before we experience the pre-halving rally, before we then experience the pre-halving retrace, before we then see post-halving reaccumulation, before we then see post-halving parabolic price action to new all-time highs. I hope you enjoyed this video. Subscribe to the channel and like this video if you enjoy more content like this going forward, and I'll speak to you in the next one. Speak to you soon.